Nvidia jumped nearly 7% yesterday on no news really, while Rivian soared 50% in the after hours trading on news that Volkswagen will throw $5 billion to form a joint venture with the American EV maker to produce the next generation of electric cars. So major US indices advanced yesterday. Crude oil remained close to a key resistance level, while cocoa futures entered their longest losing streak since December this year on some favorable weather conditions for cocoa producers finally. So welcome. This is Swissco's Daily Market Talk. So good news, people. Sell-off in Nvidia didn't deepen yesterday. On the contrary, the recent end of quarter and end of the first half of the year attracted some dip buyers back to Nvidia, if you can call it a dip just yet, and Nvidia shares ended up yesterday's trading session almost 7% higher in a single session. The bulls couldn't wait longer for a deeper drawdown to take back the reins of this market. So yesterday's jump in Nvidia will certainly help to cool the downside pressure and ease long squeeze worries as well for Nvidia. But the decent and rapid price pullback that we experienced since last Friday in Nvidia shares is a sign that we might see an increased volatility and also two-sided price moves moving forward. For now, though, it's important to note that the fact that the sell-off in Nvidia was not due to a fundamental reason or news certainly helped limiting damages, and this is the good takeaway of what we saw over the past couple of sessions. Now, when Nvidia smiles, major US indices follow suit. The S&P 500 advanced 0.39% yesterday, while Nasdaq 100 jumped more than 1% in a single session. Well, it's not much, but it's still a good jump. Bitcoin also recovered after tipping a toe below the 60,000 psychological level earlier in the week. And in other crispy news, Rivian jumped more than 8.5% yesterday and soared 50% in the after hours trading. Yes, you hear that right. Rivian shares soared 50% in the after hours trading yesterday after Volkswagen announced that it will invest $5 billion to form a joint venture to develop the next generation battery powered vehicles with leading edge software. Whoa. So $1 billion will be put on the table immediately, and the additional $4 billion over time. So this is what you call winning the lottery for Rivian. Now, it won't bring Rivian's share price back to $180 per share that we saw right after an incredibly speculative and completely nonsense IPO, but it could actually help the company survive in the first race and grow at a reasonable pace moving forward. Elsewhere, good news also came from FedEx yesterday. The shares jumped 15% in the after hours trading after the company announced better than expected revenue and better than expected earnings amid massive cost-cutting efforts, tempered capital spending, but FedEx also expect demand to moderately improve through the next fiscal year, which is good news, and they are believed to be a good indicator for the economic health. So all in all, yesterday was a good session for the markets, except for the Chinese stocks, obviously, that were already under a decent selling pressure recently and saw the downside pressure increase yesterday on news that OpenAI will be further curbing China's access to its software. European stocks, on the other hand, remain under selling pressure as well on the back of these French political shenanigans, while Airbus was hit by a 9% sell-off yesterday after lowering its profit outlook for this year by 20%. And we have big numbers today. Hey, 20% down the profit outlook for Airbus. It's not nothing. And that's apparently due to supply chain problems in engines, iris structures, and cabin equipment. It's not really the best times for the plane makers, to say the least, but Boeing in the US also having massive security issues. But anyway, Long story short, while the European Stoxx 600 index was slightly lower yesterday, the French CAC 40 fell 0.58%, but found support near its 200-day moving average, and the futures are pointing at a bullish start to today's trading session at the time I'm talking here this morning, which means that the positive vibes from the US session may eventually help improve European investors' mood here in Europe as well, despite political uncertainties and Airbus worries elsewhere. Stocks in Japan continue to surf on a weak Japanese yen, and the dollar yen is still hovering near the 160 psychological level with limited appetite for further upside due to the FX intervention threat from the Japanese authorities that should come anytime at these levels. On the bond side, a 69 billion US dollar worth of US 2-year note sale yesterday saw a good demand and kept the 2-year yield near the 4.70% level. We have another round of 5-year note sale due today and 7-year note due Thursday this week that could eventually see a strong demand from investors as well, given the talk that we hear today regarding the slowing US economy and finally loosening jobs market in the US. So at the start of this week, while the Federal Reserve's Mary Daly reinforced the idea that the US jobs market could be finally coming to an inflection point and that a further slowdown in job vacancies in the US could lead to a higher unemployment rate. So that would be obviously very positive for the Federal Reserve, those and the rate cut expectations if and only if inflation eases along. And we are not yet sure of that. We are not even sure that the jobs market in the US will continue to weaken, to be perfectly honest with you, because look, the consumer sentiment data that was released yesterday in the US showed that current market conditions improved for the first time since the beginning of this year. And 5 out of 8 Federal Reserve surveys released this month indicated increases in employment. And additionally, S&P Global's preliminary purchasing managers index, or PMI index, for June revealed that service sector payrolls grew at the fastest pace in 5 months, which is not great news for the Fed, while manufacturing payrolls rose at the highest rate in 21 months. So it's not yet time to cry victory just yet for the Fed though. So let's have a look at Thursday's GDP update and also this Friday's core PCE number, the Federal Reserve's favorite gauge of inflation, to see how the rate expectations will shape. In Europe, the first wave of June preliminary inflation data will also be closely watched on Friday this week to reshape the ECB rate cut expectations as well. Now, in the FX markets, the US dollar index remains upbeat, and that's on mixed economic data from the US and on the back of this foggy outlook regarding what the US Federal Reserve might and might not do with its interest rate policy. The euro dollar remains offered into 107.50 level, while the loonie continues to remain upbeat on strong appetite for oil and after a stronger than expected CPI update in Canada yesterday, while pretty much spoiled the rate cut expectations from the Bank of Canada anytime soon. In commodities, US crude consolidates gains below the $82 per barrel key Fibonacci resistance, while cocoa futures extend losses at increased speed on the back of some favorable news for cocoa producers, including rain in Ghana that eased the supply concerns, for example. So the bearish mood that we see today is also believed to be amplified by a lack of liquidity and also long squeeze concerns and long squeeze itself. And at this point, it certainly looks like the cocoa bubble has burst and the downside correction should continue until we reach reasonable levels for cocoa prices in the medium to long run. My understanding of reasonable level goes all the way down to, well, $2,500, $3,000 a ton in the long run, which has been the trading range of the last 8 years, mind you. Yes, if the supply concerns remain, well, we could see the price of a ton of cocoa trades between 4,000 and 5,000 level a ton, but I don't really think that we will be seeing 20,000 $8,000 a ton that many investors or many traders were speculating about just a couple of months ago. Note that we are still near $7,800 a ton right now, and there is still a good downside potential in the short run. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please don't hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.